We have with us three panelists who are happy to take your questions as well. Chia Hui Keng, Managing Director of Citygate Dewey Rogerson Singapore, along with the Chief Operating Officer and Head of Investor Relations at Cromwell European REIT, Elena Arabachieva, and Emeritus Advisor of Corporate Access and Investor Relations at SG Listcos, an association of listed companies on the Singapore Exchange, Harold Wu. Great to have you all with us. Thank you very much for joining us. Our topic today is very much around best ways of communication. Let's just get a quick snapshot of where we're at with communications, starting with you, Elena. What's the issue of you? Where are we at?
Investor relations, communications. Admittedly, the REITs, which is a sector I work for, has not had the best year on the market. And in a year like this, communication is especially important. The worst thing you can do in an environment like this is to hide under a rock and wait for the market to improve. Mm-hmm. Communication is very important in situations like that. Retail investors, institutional investors would like to be able to get on time, on target information, and be able to speak to the investor relations team, to the management of the company. So I would say communications is more important than ever. And just to pick on something that David said earlier on about trust, as communications and investor relations professionals, we can control the trust by communicating clearly to the market. We can, as managers, we can have influence on the performance of the company, but what market does is not up to us. So that's what we can do.
But it's scary, isn't it, Elena? I mean, you would say, you know, we can all communicate well when the times are good, but how do you get over the angst and that sinking feeling that whatever you say might result in a drop in your share price in bad times?
Well, if you're a coward, you're probably not supposed to be doing investor relations. It's not for the faint-hearted. I guess depends on experience, and you probably need to have seen a few cycles to be able to hold still. You, as an investor relations professionals, we can't be the ones to use a colloquial term, freaking out. Yes. Our senior management, our CEOs, our chief financial officers are looking to us for guidance and for advice, for counsel. How do we communicate to the market? And being jittery in situations like that is the worst possible. Reacting first before thinking is probably not such a good idea. We just need to remember that we need to be truthful and authentic and consistent in our communications.
Another man of steel, Harold Wu, when you were at CapitaLand, presumably also didn't always have good news to communicate. Harold, CapitaLand seems to have a reputation for calling it as it is. Is that what the inside view was as well? Harold, you're still on mute. Okay, just asking Harold.
Sorry, I was muted. Let me start again. Well, I actually joined CapitaLand in June 2003, and I stayed on as a head of investor relations until 2015, when I had to retire to pass on to my successor. So I think, first of all, I was very fortunate. I was actually headhunted to join CapitaLand. Prior to that, I was actually an institutional stockbroker. So, you know, as a stockbroker, institutional stockbroker, you got to tell the good news or the bad news. If you go and hide and there's something bad, first of all, I think your fund managers will desert you and they will never be able to give you a buy order ever again. So credibility is very important. So I think that's something which I brought to the table. And I must say I was very fortunate. The senior management of CapitaLand actually recognized and appreciated the strategic value of investor relations. I mean, to put it briefly, David mentioned the so-called definition from NIRI, but I would say that the strategic value of investor relations is actually a communication bridge between the management and investment community. And so one of the things which when I came on board was also CapitaLand then, as you recall, some of your investors know, was a result of a merger between DBS Land and Fidemco Land. And both they were Temasek linked companies.
Yes.
So because of that, and DBS Land was a very widely held company, at the point of inception, we had something like 70,000 retail shareholders, or some holding very small bought lots of $1,000, 1,000 shares or more then. So I think it was very important, and I recognized that there was no way, using my institutional background, I had an IR plan of how to deepen and broaden the shareholder base among the institutions, because I already know, I had knowledge of these people and who they were in the US, the money centers in London, in various parts, financial capitals of Europe. But there was no way I could engage 70,000 retail shareholders. So I actually took it on to work very closely with SIAS, and I think David can attest to that we actually sponsored the investor education program, which allows all our shareholders to access to all of SIAS membership and their services. So it was also to bring them up to speed. But more importantly, if you recall, in the first 10 years or so, CapitaLand actually created the first REIT, Capital Mall Trust. And subsequently, we were the sponsor for 5 other REITs. And in between, actually, we had 3 privatizations. We privatized Raffles Holdings, we privatized Yasket, and then subsequently, we actually privatized Capital Commercial Trust. Now, while each of these had their own investor relations officer, also as group head of IR, there always was a dotted line, and we meet every quarterly to make sure we had alignment of interest, the alignment of key messages. And because CapitaLand was a sponsor and we were involved in the corporate action, it was also very important to make sure that investors, both institution, and that one I think we do it by going on what we call deal roadshow, together with led by the investment bank to meet our shareholders. But to meet with to engage the retail shareholders, we actually work very closely with SIAS. So we always hold a dialogue session whereby SIAS will invite their members who are shareholders of either the REIT or CapitaLand, and our senior management will be there to present our case for the corporate action. And of course, take questions and answer any queries. So I think that helped a long way in helping us to secure the mandate to successfully conclude all this corporate action that we did.
Yes. When you moved from the buy side to the sell side, right? When you went from being a stockbroker outside the company to looking to promote shares in the company, did you find that there were any lessons that you learned from that? Any thoughts or expectations that you had before you joined CapitaLand that might not be so obvious from the outside?
Well, I think as in any new assignment that you do, first of all, you have to really bring yourself up to speed. You have to build up your body of knowledge. And particularly because CapitaLand then also was very widely held by a lot of institutional shareholders. I used to meet institutional investors at least once a day. So in a year, I would meet about 600 investors, institutional investors. So it's very important that you keep up to speed. And when I said that the senior management of CapitaLand recognized the strategic value of CapitaLand, in fact, it was my CEO then who said that, oh, in that case, Harold, you make sure you sit in at every board meeting. So the board meets every quarter. I sat in on all the CapitaLand board meeting because he said, if you don't sit at the board meeting, how do you know what we are talking about? And how do you convey those key messages and the rationale of what we do to when you meet institutional investor? Yes. So the same thing, when the REITs were created, I also sat in at all the quarterly meetings of all the REITs. So that really brought me up to speed. And I would say that I could actually then convey the key messages very effectively to my stakeholders.
And Hui Keng, good afternoon to you as well. Presumably when you've got a whole bouquet of companies that you're working with, you see a whole spectrum of the ways that they communicate and that they react when they have to deliver bad news. Again, give us a snapshot, some color on what that's like from your perspective.
Absolutely right, and I think the reasoning and rationale I think is consistent across what Elena and what Harold has shared. Right, that being open is key, and that is in good times and bad times, and we've seen that for some clients, right, who continued persevered on with their quarterly briefings to analysts to investors, even with bad news. And I think they are rewarded with trust and confidence when they are able to come back, to the market with improved performances and where they deliver, right, on their strategies. And I think I cannot stress enough the importance of continuous contact and touch points with investors, retail and institutions, right? So with COVID, post COVID, with COVID, we've all now very much gone on to webinars. I think some clients also see the value of face-to-face interaction. We've seen from the quizzes, questions earlier, right, that the mode of contacts would still be meetings, virtual and otherwise. So we've seen some clients continue with in-person meetings, and by increasing touch points, they also do webinars, virtual events, many with SIAS, to reach out with retail investors on a much more regular basis other than the annual AGMs. So I think all of that goes a long way towards building that trust and also improving and enhancing communications with investors. And I also want to bring up an example of a small cap that we worked for, Oceanus, right, which went through a very tough restructuring, and even as and for them, to organize they to actually to try and explain to shareholders the progress of their restructuring. They in fact offered to organize a fam trip for retail investors to visit their operations in China, and retail investors had to pay their own way. And you'll be surprised that a fairly large group of retail investors actually paid their own way to go visit the premises and also speak to the management during that course of the trip. So, for a lot of retail investors, it's not just about the buffets, the AGMs, and all that. They are more than willing, right, to put in their money to invest in a company if they do see a value in
What does
doing
the
so.
company do, Wee Keng?
Oceanus, which is it used to be in abalone, but now it is in food technology.
I see. So there wasn't
Yes.
free abalone when they got to China, was there?
No. I think all the retail shareholders got was perhaps maybe a dinner or so and a visit, right,
Yeah.
and meetings. But airfare, accommodation was all taken care of by the retail investors themselves.
Yes. Still, I come back to this point that it's easy enough to communicate when times are well, or as you said earlier, when the strategy has worked out and everything's on track. But clearly, that's not always going to happen. And what's your assessment of the way that companies tend to react when they have something nice to say? They're freely available, but when they have some bad news to announce, they run and hide.
Yes, I think it depends on, of course, whether or not the management, right, and of course together with the investor relations team, that they are able to communicate and agree on a stance, right. And I think it is an imperative, and I think I'm sure Eleanor and Harold will be able to add later, right, that the importance of convincing the board and the senior management team to actually come out and address, right, those issues, and we will find that it is best to do so as soon as possible, right? Rather than to let speculation, and also uncertainty continue, right? Then, of course, on the other hand, we need to balance disclosures, right? That listed companies have to adhere to. So I think it's really being as prepared as possible under the circumstances, and coming to update investors as soon as we are able to do so.
Elena?
There is many points I would like to build on from what Harold and from what Wee Keng have said. One thing that I think it's important to remember is that not they are the big and small companies, and it's natural for investors to focus more on the big companies and less on the small companies. So when you're a small company, you have to try harder. It doesn't mean you can drop your standards. On the contrary, you have to try harder because you're competing for what's increasingly short attention span. So you need to be very, very persuasive in the way you make the case. And going to the point about enlisting the board. As an investor relations professional, again, David mentioned earlier about the skill set that you need to build. It's a cross between finance and marketing and sales and communications and understanding numbers. So it's a very unique skill set. We as investor relations professionals have a duty to keep our board and our CEO up to speed what the market is saying. And I'm very fortunate because in Cromwell European REIT, I get a seat at a table. I sit in all board meetings, like what Harold gave as an example. The board wants to hear from me every quarter what the market is thinking, what investors are thinking. We do presentations to the board that actually track the performance of our peers. And I do actually share anecdotes from investors that we meet. Harold said earlier he met in CapitaLand Days 600 institutional investors. Last year, we did something like close to 150 meetings and more than 2,000 investors. And we are a REIT that's less than $1 billion market cap. We are 100% overseas assets, so investors can't see these. We need to bring it to them. So we do seminars, we do engagements. So yeah, engaging with the senior management team, getting the board up to speed what the investors are saying is important. And the last point I would like to make is that a lot has been said about retail investors and institutional investors. Let's not forget that institutional investors are also retail investors. A lot of times they're also investing their own personal funds through their own personal channels. So to me, there's no difference. We have time for retail investors and we have time for institutional investors. Just communication channels are different, but I have to say that I have received very, very sophisticated and very knowledgeable questions from retail investors.
Mm-hmm. Cool. Harold, SG Listcos has taken it upon itself to help listed companies to communicate better. Firstly, how many members do you now have?
I'm not privy to the current number. I
see.
think it's about 60 plus.
I see.
This is fairly new. They just passed their first anniversary.
Indeed.
But what they did is I think they put more emphasis on ESG because, ESG is now front and center for a lot of Eastern companies. Yeah.
Indeed. And you're advising, I understand, in a capacity of advising them on IR and so on. So I guess the first...
They have three advisory panel.
Yes.
Yeah, I'm only on corporate access and IR. There's one for advocacy and thought leadership, and there's one on ESG practices. Yeah.
Right. So, of course, that makes you wonder, where are the other 640 odd companies? Do you get the sense when you talk to member companies that these are the cream of the crop who actually do really take communication seriously?
Well, actually, I was president of the IRPS, Investor Relations Professional Association. Yes. So we morphed into SG Listco because SG Listco decided to take on the corporate access, which was actually undertaken by SGX itself directly. Yeah. So that's where we started.
Indeed.
But if I could give a bit of context and, I take the point, following on the point from Eleanor that she said, yes, big companies obviously have got more resources at the disposal. So that's one bucket. Then you got probably the small and mid cap as another bucket. And then, of course, you got pre-IPO experience as another bucket. So I think each of them, you have to play to your strength. But I would think that, and I think it's now quite common, but a couple of, when I was still a practitioner, and we did a survey, we were quite surprised, and we came up with a best webcast competition. And to our surprise, actually, at that point in time, some listed companies actually didn't have a website. I mean, you wouldn't believe it. So I think one of the first initial touch point, and really as a listed company, you have no excuse if you don't have a website. Make sure your website is user-friendly, put as much as you can, have a separate section, which is probably called IR, and then put as much pertinent information as you can, so that people don't have to, navigate the whole website and, very quickly find what they want to know. Yes. And if I would say that if you can convince your CEO or your CFO, first of all, that actually live webcast nowadays is, especially after COVID, everyone is so comfortable in front of a Zoom camera. But at CapitaLand, actually, we can stand on record. We're the first publicly listed company to have a live webcast of our interim and full year results, whereby a whole panel of senior managers were there, including the CEO and the CFO. And this was held in our auditorium together with the financial media. So all the financial media, Business Times, Straits Times, The Edge, Bloomberg, CNBC. And I remember, Mark, you were there at CNBC at the time. And of course, we invited all the analysts. But okay, to be fair, CapitaLand, because it was a very large cap, we had about almost 20 sell-side analysts covering us. So I don't think small cap, you can expect that sort of coverage. But first of all, you got to make sure that your CEO or whoever, the spokesperson, he should be media trained. And then, because not everyone is a natural presenter, call Mark, actually. He'll be able to help you. And then I think take it from there.
Thank you for the advertisement. Let's take a look at what you said so far in our polls. 22 of you have voted so far more welcome. Please feel free to use the Menti code at the top of the screen. What strikes me about this, Elena and Hui Keng, and of course you too, Harold, is that when we are in the sender's position, that is when we're on the IR side, we want to send out messages, we think we got to go out there. But when we're on the investor side, how many times in the last year have you contacted the IR team of a company you've invested in? Actually, it's relatively seldomly. Elena, what's your view on this?
I would say it depends on the investor. And there are some investors that are just more engaged. The more experienced the investor relations team and the more time you spend in the market, the more you know about your investors and you learn how they prefer to communicate. At Cromwell WeRead, we have all sorts of investors. Some investors like to just receive stuff by email. Some investors don't like to ask questions. They just like to listen to our presentation. Some investors are very, very engaged. So I'll say it's no one size fits all. It really depends on the type of investors that you have. And I want to build on what Harold said about webcast. I agree with you. Live webcast with investors is increasingly important. We actually do this 4 times a year. Not only we do that, but we also put on SGX information on our webcast. So everybody that invests in our company can actually dial in. And we've seen a lot of engagement and we've seen a lot of recognition from investors that they appreciate this. And the last point is on the analysts. Yeah, I agree, Harold, with you. Nowadays, it's quite difficult to get analysts to cover us. I mean, the profession has evolved and obviously they have a lot on their hands. And getting airtime with them is not as easy, and they have a lot of companies to cover. So that's why it's even more important for listed companies to communicate to their investors financials, because not always analysts will cover.
Indeed. Well, let's take in the next slide to see whether webcasts actually feature strongly. We also asked you what channels do investors reach out to you on. So once again, this is inbound. And email certainly seems very much front and center on this one. Wow, WhatsApp. That's really interesting. Thank you. If you contributed that one, do you get messages or two on WhatsApp, Elena? Hui Keng, do your clients have a business WhatsApp account that they can message? Elena.
I'll say very quickly, and I'll let Hui Keng answer. Okay, so unfortunately or fortunately, COVID changed the game. So COVID was the big equalizer. During COVID, investors couldn't really call hotlines in the office. So they increasingly started communicating via mobile phones. And yeah, I do use WhatsApp communication quite a lot. I would not necessarily say that's my preferred mode, but sometimes it's faster. So if people just want to ask a quick question or get a quick data point that they do not know where to find, yeah, definitely. Email continues to be quite widely used, I would say, and face-to-face, for me, I'm sorry, I'm a bit old school. I prefer face-to-face. There's nothing like engaging with your investors face-to-face.
Thank you. Hui Keng?
Yes, I totally agree with Eleanor, right? With COVID, whether it's WhatsApp, and I think even most recently, we have Telegram chats, right? Where the retail shareholders, get on to chat, to share information. And while I myself might not have been personally involved, but I have seen clients interact with investors and analysts in the big group Telegram chats, right? So it's exactly as what Eleanor has shared. I think it's a great platform, whether it's WhatsApp or Telegram, to share links, to publicly available information where sometimes investors overlook, right, or have no idea that it's there, or to highlight certain key points that we want to make across and draw them back, of course, to what has been disclosed previously. But I think it's probably quite challenging to have any in-depth discussions over WhatsApp or Telegram, right? So I think it's an extension of the webinars, the meeting, the face-to-face meetings, that companies already do, and WhatsApp can be used to and Telegram can be used to distribute links, to results, announcements, video links, and all. And I think right now that's what we are seeing mostly.
Interesting. Well, let's, before I invite Harold to also chime in, we also asked you about this question. Once again, you can still contribute to our word cloud. What channels? So the first one was when people ask you, how do they message you? And now this one is, how do you get the message out? I see during AGMs or EGMs. Thank you for sending that one. Website, physical meetings, calls. Harold, do you have experience with WhatsApp as well? I imagine the conversation is far less formal, far more informal when people are chatting with you through a commonly used mobile-based chat function.
Well, when I was the IRO at CapitaLand, actually WhatsApp wasn't that readily available, or wasn't that well adopted as a communication channel. But in our website, we always have this ask us. So most of the queries will come to the website, and you can rest assured that you'll be you get an instant response on the day itself, within the hour, I would say, if it's a simple reply. And we'll either reply to you by email, or we direct you to somewhere in our annual report or in our website. I'm a little bit mindful. I think it's a bit tricky when you take responses through WhatsApp, particularly if it's individual to you, because one of the things you always have to bear in mind is as a public listed company, you cannot make selective disclosure. So sometimes you may slip through the crack. It's always better to be very open, but make sure that it's publicly disseminated. So coming to the point when I said we actually have live webcasts, sometimes you may not be able to join in at the time because you are tied up, but our briefings actually are all archived and it's on our website. So you can at your own time, go and listen to what was said.
Your loyalty extends far beyond your tenure. Harold, you're still referring to we and us.
Well, they've treated me very well, and I'm still, very grateful. I had a very enjoyable time. I made many new friends, not only institutional investors, fund managers, but actually some very active retail investors as well. Yes. Something which, when I left CapitaLand as a practitioner, and I was working as an advisory role in agency, the same friendships I extended. We carried on those relationships, and I would say that because working for a real estate company, we have an inherent advantage. We are brick and mortar. So I always organize yearly meetings to visit China or places where we had launched new projects and people could kick the tires and see for themselves. Yes. But when I was advising Cecil Reed, we did the same thing. We brought a group of analysts as well as some investors to visit all the 4 retail malls for Cecil Reed. And I think after that, we could see that there was a very strong following. Yes. And I think to this day, that's still being carried on by the company. Awesome. The same for another example is Grand Banks. I was also advising grand banks when I was at the agency, and we actually brought them to visit their yard in Pasir Gudang. And that was very went down very well, because we could actually see what happened and how the ship was being built. And when you say that, oh, why do people buy this boat for $1 million? And then you could see that the technicians and the carpenter were working on it. And I mean, that's nothing like seeing and believing. And meeting, of course, the CEO on the spot, taking questions after the site visit.
Yes. Yes. Well, speaking of taking questions, let's take some of your questions now. Once again, drop them into the Q&A function here on Zoom or on Mentimeter. Firstly, here's our first question. Thank you for submitting this one. You write, it seems the IR function would best be an internal corporate function. How true is that? I'll leave it to you.
Well, if I could try to take it on. I think for the large companies, because perhaps they have a bigger budget, normally they would like to have the IR in-house as an internal function. Anyway, the normal IR department is only probably about 2 or at most 3%. Even at CapitaLand, I didn't have more than 3 warm bodies, excluding the secretary.
Right.
So, but if you are a mid cap, I suppose, and sometimes the IR actually then is given IR function responsibility is given to the CFO, and he may actually be the official spokesperson. And then maybe that's executives to help him. So that's also internal function. But some people would just like to appoint it and outsource it to an agency. That's fine. But provided that I think the management work very closely with the agency and come up with an IR plan, at least a 1-year plan, and then you have milestones and agree on what are the deliverables and what you want to see and our KPIs, so that it's measurable. And I think that's also a very effective way. So as your market cap grows, perhaps then you can take it back as an in-house function.
Indeed. So Hui Keng, do you feel that you face any disadvantage for not being in-house and possibly you don't get a seat at the boardroom table?
I think there are different ways that as a consultancy we work with our clients, IR function, and we have clients across various market caps, and they use us for different ways. As Harold pointed out, for small to mid caps, we can be an extension, right, of their teams in terms of execution. Of course, in terms of the overall IR direction, management strategies, that would have to be formulated and developed in-house. And what we offer, could potentially sometimes we could be a sounding board, for certain ideas and strategies, right, that the companies would like to pursue. And I think we offer that breadth of industry experience, right, and exposure that we can share with our clients, and that would contribute and be input to whatever they are working on, and they could take that into consideration.
Okay, thank you for that. Elena, of course, not to shut you out, you're welcome to come on in too.
Thank you. Again, I think you have a very good spread of panelists because you do have Harold that comes from a very, very large cap, one of the government-linked companies, and then you have a media agency, and then I'm representing the REIT sector, which is actually the second largest by market cap. So I think the code and the governance of the REIT sector has probably contributed outsizedly the most to the investor relations profession outside of the large caps, because maybe some of you know that the REITs are all required to have an investor relations standalone professional, which really has added a lot of value. I would say it's the best of both worlds to have the function in-house, because we do use media agency. I'm not gonna say the name, and I work very closely with them, but they're sometimes not necessarily as close as me to what the real-time thinking of the company is. So to me, this works best in a combination. IR is the closest to the action, so you have to have it internally. I feel very strongly that investor relations should be a profession that is a senior level profession. You will have no use of an investor professional that is just doing annual reports and printing of presentations. That kind of investor relations is not going to add value to the company. if you cannot say to your CEO, you should not say this publicly, you shouldn't be sitting in an investor relations chair, because that's our job as professionals, to provide unfiltered guidance, and whether the advice and the feedback is taken into consideration, that's another question. But we have a role to play to making sure that we give feedback to the point of Hui Heng said, strategy forming, how we communicate with investors is very, very important as listed company. Mm-hmm. So I would say it should be a combination.
Awesome. Harold, you have some research to share in relation to what institutional investors have to say about the subject as well. And to that end, this was the final of the poll questions. Once again, you're still welcome to add your voice by going to the Menti code that's on your screen. The question we asked is, what is the most important quality in a company's investor relations officer? We asked you to rank them. First at the moment is timely and comprehensive disclosure. Credibility of management and IROs is the second most important quality, according to you here today, and easy access to management. Much further back is to provide lots of written information and to speak well at conferences. Harold, would you like to jump in?
Well, I think the first three bullet points, I think not a surprise. Although I think when we did the survey back in 2013 with the fund managers, credibility of management and IROs came out as a top quality. Yeah.
I see.
But I think timely and comprehensive disclosure, I would say really that's a given, especially now you've got a rash co, watching over your shoulder. But yesterday at the SIAS seminar of, Mark, you're there, it came across that they feel that actually press releases are not very effective because nobody really reads press releases anymore. They know that it's just a PR document. Yeah. So it's more importantly that maybe you should elaborate a little bit. Yeah, have the press release, but if it's important, what we do is when I was a practitioner, we actually would call up and speak with our fund managers directly after the press release or once it's publicly released, and just ask them whether they needed better clarity. Is there anything that they want to know more? I was qualify myself. Be careful that you're not making selective disclosure. Yeah. So I think all this it comes with practice. If you're IRO, if the baptism of fire, once you've done it umpteen times, I think you know what to do. Yes. And I think more importantly, the more you engage with people, after a while, you do build up the trust factor. So you can actually speak quite candidly, and they know that certain things you can't say, but there's a bit of trust, and that's where the credibility part comes in. Yeah.
Okay. Thank you for your contributions. Keep them coming. Meantime, also more questions are coming in. This one here, I think is from a Mr. Lien. Thank you for messaging. You're asking, can the panel comment on the roles of proxy advisory firms and activist investors and what the role they play in shaping corporate governance and investor relations, and how should companies respond to their recommendations and actions? Once again, otherwise I'll farm it out if you're not all leaping in. Elena, how do you deal with these sort of input?
Thanks. Very, very interesting question and timely, I would say. So proxy advisors in Singapore are starting to become more prominent and more important. If you have asked that question 4 years ago, probably you would not have had a lot of people that even know what these guys do, right? But we've seen with the recent shareholder activism that has happened in the market, people are paying more attention. We are very fortunate in my company that we actually have an Australian listed sponsor. So if you're familiar with the Australian market, you know that proxy advisors are really, really very, very important. So we actually very early after we listed in 2017, and we've never, I mean, knock on wood, had yet a need to, we've never done anything controversial in our AGMs or EGMs, but we don't take proxy advisors for granted. In fact, we do subscribe to some corporate governance hub information, and I look at the policies that these advisors are issuing. They typically issue an advice closer to AGM to your company, and they advise institutional investors on voting.
Okay.
I would recommend the people that...
Sorry to interrupt, Elena, but as you correctly said, 10 years ago, nobody in Singapore would have thought about them.
Yeah.
Would you like to, for the uninitiated here today, would you like to just explain what that proxy advisory firm does?
Proxy advisors, well, I will explain it in a layman's term, but there are really 2 or 3 companies that do that. SIAS and Glass Lewis are the major ones, and they typically look at resolutions that are put up at companies, AGMs, and they give advice to institutional investors. They issue official advice that says, okay, you must vote for or against these resolutions. And what typically happens is that large institutional investors, they have investments in a lot of companies, and they vote majority of cases based on proxy advisor. So if you have a proxy advisor saying you should vote against a resolution of a company, the company then will have to make the case at the AGM why they should investors actually should vote for them. So again, we haven't had that much controversy in Singapore with the exception of a few cases, so people have not really experienced, but we've seen recently proxy advisors actually being very vocal about it. And in the same vein, so we actually did have an education session for our board of directors 3 years ago on what proxy advisors do. They wanted to see an actual opinion on our AGM, so we did actually present that. Again, we don't take this for granted. Same for activist investors. I mean, Mr. Gerard can tell you that CIAS is actually, I forgot what the term he uses, but it is a friendly activist, right? So rather have a coffee with CIAS as opposed to facing them at the AGM. But we do know some of the other activist investors that have been very active in Singapore. And I can tell you that I'm monitoring very closely that particular shareholding. We know them, we talk to them, we present the company, we reach out to them. Hiding from activist investors is not going to work. So I might as well just engage them early on, and not at the time they suddenly appear on your AGM and start. Yeah, so I will say this is really my takeaway for these 2 topics.
Good. Thank you for the question. 20 minutes until the end of our webcast, so please make sure that you get your question in soonest. Another question here from you, one of our viewers. You're asking, should there be just one spokesman for the company for communications? Elena first, and then Hui Keng and Harold.
My views on this have evolved. I think it's important to look at the size of the company. That's very, very important. If you are a company that is maybe small to mid cap and even some of the large cap, it makes no sense to have multiple spokespeople of the company. Nowadays, people don't really have that much time. And then you may want to have a person or 2 to be associated with the company so people can start connecting. You always have to think about companies first. You as an individual, you have a role to play, but you're a professional. So typically, I would say that it's good to have 1 or 2 spokespeople. If you're talking about companies like Apple or, like really, really large companies, they may have multiple spokespeople because they have a lot of different income streams, a lot of different topics to talk about. But if your business is one business, straightforward business, and you probably don't want to be throwing a lot of people to speak about it. That's my professional view, and this is how we have practiced communications and investor relations in Cromwell. We typically have our CEO. I do speak on his behalf sometimes in this panel. Perfect example because it's related to my function. But outside of that, when it comes to company matters, I would say it's good to stick to 1 or 2 spokespeople.
Okay, building on that, Hui Keng, arguably some companies have multiple spokespeople to demonstrate that it's not just one person. They have bench strength, as they like to say. What's your experience?
Yes, I think that is particularly applicable for some of the larger companies where there could be diverse business lines, right? And therefore, it would be a good opportunity to showcase that management team, right? But I think that clear roles, is important, so that it's also very clear to whether it's investors or even to the media who it would be speaking on what issues, what matters, right? So at all times, I think everyone looks towards the CEO or the chairman for that overall strategic direction of the company. But for a large corporation, I think it is also perfectly acceptable, even perhaps even encouraging, right, to have a different spokespeople for different business units. And I think for large corporations, that also paves the way for potentially for succession planning, where investors could see this clear bench strength, that the company can draw on. Right. So there's no right or wrong to it. And I think the size of the company and the complexity of the business, right, is important. It's an important consideration.
Yes, indeed. And then, Harold, that brings me to this next question about how should we view companies that do not have a dedicated IR department and their CFO doubles up as the investor relations officer? I guess that, also has something to do with the size of the company and the number of spokespeople. What are your thoughts?
Yeah, indeed. I think most often it'll be dictated by the size of the company, the sort of resources that it has at its hands. I think it's quite common for the CFO to take charge of the IR function if there's no IR department. If it's a small company, he probably can handle it by maybe having just an executive to help him. Alternative, as I said, he can explore appointing an agency, which is actually on a retainer basis. Maybe there's less disclosure or less updating that's required from the company. So I think there's no one size fits all. But I would expect the bigger companies want to have more control of the conversation, and they would have the budget to have a in-house IR department.
Yes. And Hui Keng, what is it from your perspective? I mean, presumably as the advisor to many IROs, what's it like serving somebody who's double hatting a CFO and IRO compared to somebody who's working with you on a dedicated?
I think it really depends, right? And I think it's not a bad thing to have the C-suites double hatting as IROs, because that shows the importance that the C-suites place to this function, right? Whether or not it's for smaller companies, whether it's the CEO or CFO could take on that function. And for the larger caps or even the large caps, I think the IROs will actually report in to that function. So it really just goes to show the importance that the C-suites place on the investor relations functions. And I think investors actually should be heartened to see that. Right. Having said that, for the large companies with the resources, definitely having the IR department to handle all the inquiries that come in, would definitely help relieve the C-suites of some of the day-to-day tasks.
Okay, good. Thank you. I hope that's answered your question. Once again, final call. Please get your questions in now. We will be wrapping on time in 15 minutes from now. Here's another question which I feel I might be able to answer. Many CEOs and board and management are camera shy and do not like to be in the limelight. What can the IR comms team do to help? Well, the reason why I'd like to take this question is because I deal with people like this every single day of the week. And what we've discovered through psychometric assessments is that when somebody is camera shy, it is due to a feature of their personality. There are actually no fewer than 12 different reasons for why somebody is camera shy. For some people, it is that they're very private people. They like to size things up before they leap. For others, it is that they really don't like cameras because they're avid people watchers. They need to see people. For others, again, it is because they are very sensitive to their surroundings, and being watched by lots of people makes them very uncomfortable. So those are just 3 of 12 distinct reasons. It can be solved, camera shyness, stage fright, but it starts with understanding why the individual is camera shy. And that's why we can't really go past a psychometric assessment like Clifton Strengths to figure that out. But then once we know what the reason is, everybody can be helped. Everybody can overcome stage fright. Stage fright is not something that you have to live with. So that's my 2 cents worth. Elena, anything else you'd like to add before I kick it out to Hui Keng and Harold?
I would say that if you are in a leadership position, CEO or board of director, you typically would have overcome the fright of facing the public. So, yeah,
I see people like this every day in very senior positions in Singapore listed companies.
I don't disagree with you. I'm just saying that it's probably at least to a certain extent a matter of like what earlier somebody mentioned about media training. But I think it is important. It's really important to encourage as much as possible this communication on camera or through other means. And yes, I agree with you. Sometimes personalities are intensively introverted. They may prefer to just focus on company performance. But if you're not able to communicate the company performance in an articulate and convincing way, it doesn't matter how well your company is doing. You have to help with communications.
Couldn't agree more. Thank you. Hui Keng, do you have sometimes have difficulty in encouraging your clients to front the cameras?
Yes, for some companies, for some clients, right? So I think one suggestion would be to start them slowly, right? Get used to it, right? And once they see the impact, they could potentially, move on to other platforms. And I think there are different ways of profiling CEOs, senior management teams. And now, there is whether it is pre-recorded, videos that as opposed to live video interviews, right? Or even so once the management have the chance to rehearse, right, and prepare, and they see the effect, I think that can overcome, some reservations.
Okay, 10 minutes to go. Another question. Let's see that we can get through as many of these as we can. Harold, I invite your comment on the previous question, but also this one. If you had 70,000 shareholders in the opening, in the genesis of Capital Land, I'm sure you would have had some of these. Vocal majority shareholders. How do you manage them? We have seen more shareholders taking the initiative to organize EGMs, which can be useful, but also disruptive. How can IR mitigate this? What was your experience, Harold?
Well, the EGM is only called when you have a resolution that requires basically, a special resolution. It cannot be passed by a simple ordinary resolution, simple majority. So what we did at CapitaLand was, as you recall, we actually were quite active. We had a lot of corporate action, either making acquisition or buying a substantial asset, which crossed the threshold. So what we did was actually, and particularly our AGM is very well attended. It's used to be actually in our auditorium. And after that, actually, we went to the Star Theatre, which could accommodate about 2,000 odd people. And obviously, you want to manage it productively, efficiently. So sometimes, you cannot allow all the shareholders to have a speaking opportunity. So what we did was, again, that's where I said we work very closely with SIAS. I actually organized a pre-AGM tea party, or you call it a tea session, where SIAS would actually find some of our shareholders who are more effective, who are more vocal, and actually we will, and this is normally with the CFO. So this will be an opportunity for them to actually raise questions, and we try and flush out some of the things which is on their mind, so that when it comes to the AGM, these more vocal ones would have actually got the answer. So then you give others a greater opportunity to raise their questions, and some of these more sensitive things are not brought out, in the general public. Yeah, because then it takes a lot more time to explain. Yeah, and the other thing, obviously, for every AGM, as a good practice, there should always be an overview, a presentation of your financial performance, and normally the CEO would do that. So you put everybody on the same page. Do brag a little bit about what you have achieved in the year and what you want to do. So you bring people up to speed. They know exactly what's in store. So there are no surprises.
And in other words,
so
allow them take the wind out of the sails of the vocal. It says majority, but I suspect vocal minority might be just as inclusive. That in essence, but by giving them the chance to speak before the AGM, they've got nothing left to say during the AGM. Is that the idea?
No, I think some will. I mean, there'll be others who want to speak. Yeah, but
all right, Hui Keng, are you actually at the receiving end of these messages on behalf of your clients?
I think we have seen on SGXNet, right, where some companies receive requisitions from vocal minority shareholders putting up resolutions to change the board members, or to push for certain strategies, right? I think, of course, communications prior, right, always helps to help all shareholders to understand the company strategies. But I guess when we pass to that stage, that's over, right? And we then need to move on to the next step, of putting forth, the board's and management's views and strategies, so that the rest of the shareholders can decide for themselves, right, on how they want to vote and where they stand. And that's where I think some of the tactics that Harold shared earlier, would come in useful, which is to be as open as possible, and to go out there as much as possible to reach out to all other shareholders, right, to bring forth your views. And if they buy in, then of course the resolutions are defeated.
I would add, before I invite Elena to also comment, that SIAS has published a guide for how shareholders should behave at AGMs. Because, I mean, as I'm sure you'd agree, Elena, it's certainly no fun being at the receiving end of the vocalism. But also for other minority shareholders, it's entertaining to begin with, but after a while, it also is a bit grating when nobody else is able to have their say. Right, Elena, what's your experience been with vocal minorities?
Again, thanks for the question. Whoever asked this is a very, very relevant question. We should remember that investors and in general human beings, when they ask questions, they sometimes just want to also be heard. So investors, institutional or retail investors, they want to be heard. And they have the right because they voted with their money by investing in the shares of the companies. So retail investors, to a great extent, and we have some very, very engaged ones, and we actually follow up with some of them. I agree with Harold. It's good to have a pre-meeting, but you also need to run the AGM in a disciplined way. So investor relations have a role to play in managing the AGM. I typically get involved in our AGMs by leading the Q&A, and you really have to be disciplined, and you just have to tell the investors after the second or the third questions, let's just give somebody else the opportunity to ask these questions. So I found this a very effective way. I also want to commend CIAS. They started a few years ago this very good practice where they actually pick a company and send them questions about their annual report. And the questions are actually, at first it's kind of like, okay, you're rushing for annual report and AGM, and then here you go, you have to answer all these questions. And I must admit, the first year it's like, okay, do I really have to do that? But we've actually come to look forward these emails, and it doesn't mean, Mr. Gerard, please don't send us one next year unnecessarily. But it actually is a good checklist of what you may have missed in your communications, or something that needs further explaining, because typically the questions are actually on financials or on strategy. And we use this as an opportunity to post our pre-AGM answers to the questions, that address everything that SIAS has asked or investors have sent us. And I think this is also another very, very effective channel that flashes out some of these questions that come through.
Good, awesome. Thank you for that. Final question, starting with you, Elena. In a recent high-profile S-REIT incident, the majority shareholders voted out the REIT manager. Could this be something that could be prevented or avoided through a robust and effective investor relations strategy?
I certainly hope so. We serve at the pleasure of our investors. REIT managers have a finite mandate. They are potentially, like this example shows, can be voted out. We really need to work very hard every day to maintain and keep the trust of investors. We are externally managed. Singapore has externally managed REIT mandate. We are governed by MAS, we are governed by SGX, we are governed by very, very robust corporate governance code. Every day, you as an investor relations professional, as a management team, you need to ask yourself, every decision that you make, are you making it in the best interest of the unit holders? If that's the answer, then by all means continue. So we need to really exercise very, very rigorous code of conduct to avoid being voted out, so to say. So yeah, definitely. I mean, there's something that definitely keeps us out at night.
And Harold, would you also say that your role as in investor relations isn't just relations, it is investor influence, so that you can prevent or avoid such cases such as the one cited here?
Yeah, I think this could have been prevented if there was a more open dialogue and, rather than wait for things to boil to the surface. Yeah. So that would be my comment, I think. Yeah. And okay. I think, to be fair, a lot of REITs are not get up to have an internal management. So I think you can see post this occurrence, it's going to take some time before they can actually build a team to manage it internally. Yeah. So in the meantime, nothing happens. It's all.
Okay. And we can presumably that means that you need to take a proactive approach rather than a reactive one. Is that how? Is that what your clients use for?
Yes.
Sure. Yes. I think proactively communicating with that particular investor, right, and also I think conveying that strategies, the deliverables and achievements to the rest of the investors would also be important, right? Having said that, I think the relationship that companies have with investors, right, sometimes goes back a long way, right? And I think that consistency in that approach to investors, also in terms of the strategies, that the companies put in place. I think investors have long memories, so they will remember, right? And it all can go back a long way. So it's really best to do the right thing right from the start.
And on that note, we will end. Thank you to all of you for your comments. Thank you for watching. Please complete the feedback and we will look forward to seeing you at the next SIAS event. My thanks to Chia Hui Keng from Citygate Dewey Rogerson Singapore, Elena Arabajieva from Cromwell European REIT, and Harold Wu from SG Liscos. My name is Mark Laudy. Enjoy the rest of your evening.